Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here today. Today's episode, I want to do a little bit of deeper dive. Recently, actually earlier this week, there was a report that came out more so for clickbait more than anything else. And I've seen people diving on it, regurgitating up, talking about how bad it is. It's honestly not that bad, but what it is, it talks about, it's a report about 94 banks in trouble facing a serious risk on they have a bank run. And here's what the article looks like. 94 U.S. banks at serious risk of bank runs, including Bank of New York, State Street, JP Morgan Chase, and Citibank, the report says. Now, is that technically correct? Yes. What the article goes on to list is a Florida Atlantic University banking study which tracked banks at over $1 billion in assets. And then one part of the article just talks about the fact that these 94 banks have a lot more in uninsured deposits than what they have in insured deposits with the FDIC. Let's go there. Shall we go there? Or maybe I have it. I can't remember if I saved this next thing. So here's the actual website: liquidity risk from exposures to uninsured deposits. That's what it was. But let's go over to the actual article itself, shall we? Because I think it's important to look at this stuff. So yeah, U.S. banks, total 94 U.S. banks are at significant risk of experiencing bank runs by uninsured depositors if they show financial weakness, according to the report. The FAU analysis finds the billion-dollar banks in question, which includes 7 U.S. financial giants, have all reported 50% or higher ratios of uninsured deposits to total deposits. Okay. Now, look, let's get that right. Yes, there's a lot of people that have money that's not FDIC insured. Okay. Out of these companies, was State Street was at the highest. Bank of New York Mellon was at 100%. State Street at 92.6, Northern Trust at 73.9, Citibank at 72.5, HSBC at 69.8, Chase at 51.7, US Bank at 50.4. Okay. Now, if you don't know, although FDIC insured banks promise up to $250,000 will be protected in the event of a collapse, the FDIC uses a systematic risk exception to make all depositors whole, like they do in high-profile bank failures like at Silicon Valley Bank, Signature Bank, and First Republic Bank. Okay, so in this year's failure of Republic First Bank, the FDIC quickly arranged for Fulton Bank to assume all deposits. So here's the thing: this is just one part. Look, you can look at all uninsured deposits and say, "Oh, it makes sense for this." That's not the full thing. So if you actually look at the stinking report, you'll find a lot more value. Now, this is here. It's basically 3 parts. All right. Now let's first look at the uninsured deposit parts. Okay. And I'm sharing this online. If you're watching or listening, you probably go over and watch it because you're going to learn some stuff about this stuff. Okay. So like the Bank of New York Mellon, they've got total assets $1,357 billion. John Deere Financial, man, those tractors do cost a lot. Dealing with a lot of farmers. Deutsche Bank, State Street Bank, Sumitomo Mitsui Trust Bank, Greene County Commercial Bank, Bessemer Trust Bank. So you see 1, 2, 3, 4. Let's see here. 4 out of the top 10 are in New York, a couple in New Jersey, even a couple in Texas. TIB, National Association Bank. I was kind of surprised at 11. And First State Bank of Uvalde. It's a small bank. Okay. Uvalde, Texas is kind of out in West Texas. Okay. So that tracks 100 banks. Okay. If we look at, let me just pull full 100 here. Okay. So a third of this report tracks 100 banks. Okay. And all 100 of them have at least 49.5% of their stuff is not uninsured. Pretty common in banks. Banks don't like to hold on for every dollar they lend out. They don't lend it out. They lend it out. That's what they do. They don't hold on to deposit stuff in a lot of cases. But what I found interesting, if you look at the other aspect, okay, so the second one is this ranking by FAU, which is important. The U.S. Bank's unrealized losses on investment security screener. What's that say? It's basically like banks that had all this cash. What they do with it, they went and put it in like low government bonds, low securities. And now that interest rates have increased, they're losing money because instead of lending that money out, making 6 or 7, they have an investment at 1 or 2% or 3%. Okay. And this ranks it as well. So this ranks actually, if we look at this one, this ranks 1,000 banks, okay? And some of these bigger banks like Union City Savings Bank in New Jersey, they get 172% of their portfolio, all right, to the capital in negative investments, okay? The third one, which I found the most interesting, because yes, that's bad. They're losing money technically on their investments. They have lower deposits. But the third kicker here is the bank's exposure to risk from commercial real estate, okay? And this ranks not 1,000, but 156 entries, okay? 155 entries. Eagle Bank of Maryland, Sonora Bank of the Ozarks out of Arkansas. So it ranked these different banks. Now, what do you think I did? Now, obviously, you're like, well, I'd like to know not just what bank is on one list, but which banks are on two lists or all three. Can we agree to that? That's the scary thing, is a bank's on all three. That's kind of a sign that's in trouble, okay? So that's what we did. That's what I've been doing today for about the last 5 hours, is going through, reclassifying, and literally going through these lists, searching it, filtering it, finding which banks are on which one, and figuring out a way to rank them from best to worst, who's really in trouble. Okay, we all agree it's not 1929. We're not going to have a run where everybody runs to Wall Street, pulls all their money out of the bank. Just doesn't really work that way. The bank shut down. We all know how that happens. Okay, so I don't agree 100% with the article. But if we go back to the numbers and really look at the numbers, and what the report does is it kind of ranks it as percentage, how much of their percentage and where they rank. Okay, so that's what I did. I actually took all these banks. Okay, you got to look at all three of these reports: the uninsured deposit index, the unrealized losses from investing in low rate securities, and the commercial real estate exposure reports, to really get an idea who's in good shape and who's in bad. Because yes, some banks will have a higher ranking or a lower ranking because they've got such a huge exposure to one thing. So what I did is I combined all three indexes. We discovered, it's important, 176 banks. All in total, it's over 1,000 banks, okay? 1,000 banks total across all three lists. But out of three lists, there's 176 that showed up on two, and that two varied over three different categories. But scaringly enough, there were 23 banks that ranked on all three lists. Remember, these lists are only ranking the ones that have high exposures. High exposure to commercial real estate, high unrealized losses on their bad investments, and then also high uninsured deposits, which really, that's the least of my worries, is that third one. But it's important to get a bit of idea that, hey, if a bank loses confidence by its investors, its depositors, and people move it, you're going to run into some issues. The bank will close. So did I just find a cheat sheet to figure out which 23 banks are facing foreclosure or facing being shut down by the Justice Department or the banking? Possibly, not all of them, but possibly. Okay. So when I mapped them all, and I just mapped it by state, it didn't give me city, states on these lists. So it gave me the states they're in. Now, this is not including Guam, Hawaii, or Puerto Rico. So there's three locations on here that are missing. Okay, but you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. And so basically 20. Oh, there's a few. Why didn't you show Washington up there? So it's about 30 states. The map didn't show everything. Okay, 30 states in things now, like Puerto Rico, Guam, Hawaii. There's a couple in all those places. It didn't even show Missouri. I don't know. This map didn't show up right. Batch Geo did not do me good on this map. But anyways, moving on. So our math or madness, because one of them ranked in as far as percentage of deposits over insured, their exposure to commercial real estate, and then also their unrealized losses, where they ranked in the percent. So I just took ranking. Okay, if you ranked 1 through 100 and you're on the list, great, we'll take your good list. So what we did, we took the weighted average of the 2 or 3 categories. Basically, if they ranked 30th on one and 36th on another one, we add those together and divide by 2 to get it. And we did that evenly across the board. Okay. So if they're higher on a list, the lower the number, the weighted average number, the higher the list, the bigger risk, the more riskier they're. Okay. So here's what we found. Across the banks that had 2 were on the list for twice, they averaged 285.7. Okay. They weren't so bad. They'd have one that was really bad and then one that was okay. Okay. And then one they didn't even rank on, which is okay. It's good. Right? It's a kind of relatively healthy aspect of it. It's divisions in the bank. For the 3 list, they ranked 162, which is not good to be on all 3. Okay. That, that was the mean. I'm sorry. 287 was the mean of these and 162. So that means basically you average them all. That's where the middle lie. Okay. Now here's the thing. The 176 banks that ranked on 2 lists, these are the 3 categories. So if they had bad commercial real estate and uninsured deposits, there's only 5 banks out of the 176 that fell in those 2 categories. All right. But they were higher. They ranked 68. They averaged a 68.3 net average across those 2 categories. Okay. If you look at commercial real estate and bad investments, that's not good. That's 113 banks, and they averaged 271.7 ranking average. And then the final thing, if they had uninsured deposits and bad fixed investments or investment losses, there were 58 banks, which they ranked on average of 271 average. So it's right there on the average aspect of things. Okay. But the important thing is like, okay, who are the 23 banks, right? So the 23 banks, to give you a bit of a list, starting at the bottom, CIBC, Beal Bank, JP Morgan Chase is on this list. Doesn't mean it doesn't have a lot of assets across different platforms, but these were just individual banking entities in the state they were registered in. So JP Morgan Chase had several entities across different states, but I just pulled because JP Morgan Chase Bank NA had a category on all 3 of these. Okay, Ocean First Bank, Oriental Bank, Service First Bank, Citibank, same thing. Northern TC, the Bank of Oklahoma, National Association, Asia SPZ Bank was on there, Provident Bank, Columbia Bank. That's the lower, that's the bottom 12. But the top 11 that I think are in serious trouble, that I'd almost be willing to bet money on the fact that these are going to be some of the ones that either A, go out of business or see dramatic impact of either being bought and sold off in the next 12 to 24 months, is U.S. Bank of North America. Yeah, U.S. Bank. Banco Popular of the Puerto Rico. That's not a surprise there. Banco Popular has been struggling for a while. State Street Bank and Trust Company, that's been difficult. Farmers and Merchants Bank of California, because California is struggling. Yep. First Hawaiian Bank, that was really in a difficult spot. The City National Bank of Florida out of Tampa. I think it has Tampa or the West Coast, but anyway, that's there. Frost Bank here in Texas. Not a big surprise because they really finance a lot of the office space and stuff here in difficult. So that's number 5. UNB Bank and National Association, that was number 4. Washington Trust Bank was number 3. The Bank of Hawaii is number 2, and Citizens Business Bank is number 1. All right. Now, those are the 23 that popped us. So let me share it a little bit here so you can kind of see kind of the breakdown here. So here's those in the 3 categories. And you can see, like Citizens Business Bank, they had an average weighted of 40 in the top 40. Okay. Bank of Hawaii had a high of 40, average of 48.3. It ranked like number 1, number 2 on one list and was a little higher down on the other 2 categories. But you can see this is across 3 lists. So when you look at the weighted averages, 162 of all 23 of these, anything below that really is the ones that are probably going to be in a hurting. So Columbia Bank, U.S. Bank, and Bank of Popular to Puerto Rico. And I bought debt from Banco Popular past one. Actually, it was the first bank that I bought a note from. Tells you anything, but that's a 23. If you'd like to see, here's kind of the broke down of the 176 that average. You can see the lowest one, like Greene County Commercial Bank of New York, had an average of 12 across 2 categories. It didn't appear in a third one. But the commercial banks, this is the ones for me. What does it mean for me? How am I going to take this list and apply it? Well, the ones that ranked low, if you go back to the report and look at the commercial banks exposure to commercial real estate, this would be a list that I would start targeting. I would start calling Eagle Bank, Dime Community Bank, Bank of the Ozarks, and start contacting their corporate office to see what they have on their books. These are not Wall Street hedge funds, okay? These are actually licensed banks with commercial trouble, okay? Commercial real estate's in trouble. And they got assets in the millions, and they need help. And you can see commercial real estate total to equity, 618%. They got 6 times the amount of commercial real estate to their equity. Okay, First Bank, Provident Bank, Independence Bank, DBA. I'll put the link to this actual report in the audio or in the description for you guys to take a look at. But this is where I would rank. If you really want to find commercial real estate, commercial notes, these would be the ones that I would target. These, honestly, these 155 banks, we go all the way down to 155. Well, those are at 0%. So let's take it back to, yeah, you can see some of these have 0%. Maybe I would just focus, actually, yeah, 50% commercial real estate to equity. They're not in a spot where they need to sell, but anything over 100, yeah, let's look at over 100 here. Yeah, 287. Yeah, wow. Actually, it'd make it easier if I switch this up to 100 banks per list. There we go. You go all the way down these top 155 banks, a total of them with 100%. Yeah, basically at 100%, it's 115. Regions Bank is 115 out of Alabama. I bought debt from Regions Bank in the past. So I would focus on those top 115 banks. And some of these banks are not going to deal with you because they don't want to deal with a one-off guy. And that's fine. Next. That's what I would do. So I hope you found that valuable. 23 banks really are the ones in trouble, not 94. This is not Clickbank or Clickbait for a website. This is realistically taking those three numbers and combine them together to give you a bit of an idea who's really in trouble when you base it up against everybody. Of course, there's different weighted for deposits versus upside down commercial real estate. I get it. That's about the best that I could do there for you without you going and taking a look at it yourself. So I hope you found that valuable, ladies and gentlemen. It was worth it going through it just for my own work in evaluating and discovering who I should spend more time contacting and calling banks now that we're into Q3. It's hard to believe we're in Q3 already, isn't it? Of 2024. And it's going to make for a very interesting Q4 and Q1 as we get over the next 6 to 8 months, everybody. So hope you found that valuable, ladies and gentlemen. Go out, take some action. If you want to learn how to buy, invest, and start investing, buying notes, easy way for you to do is just sign up for our one-day Note Weekend class. Go to noteweekend.com. No credit card required. Register for that. And you'll either get an access to the replay from a month ago, or whenever you listen to this, you may get access to the newest replay that we're supposed to film in the next couple of days. So go out, take some action, buddy, and we'll see you at the top.